Nvidia CEO takes advantage of year-to-date price surge, sells 1.3 million shares. Nvidia CEO Jensen has sold 1.3 million shares of the company stock over the past week, taking advantage of the 155% price surge it has experienced year-to-date. Nvidia shares were up another 4% on Wednesday. Jensen reaped about $169 million on the shares, which were sold during a period of June 28th through July 2nd, according to the form filed with the SEC. The share price ranged from $118 to $127. It is the first such sale by Jensen in 2024. This company has thrived, producer, we know the success, right? So my thought on this is, it also makes sense, even if you feel like Nvidia stock's going up. Like, you've got to, I know Jensen gets hit with big tax bills, right, as all rich people do. So that's a whole situation you got to account for there. Additionally, if you're very wealthy like this, you want to buy some stuff. I guarantee you, he likes to buy some stuff. I don't know whether that's a new mansion or a new fancy condo or a yacht or a new plane or whatever it is, okay? The bottom line is, people like this that are ballers like that, if you got all your money tied up in stock, what good is it? You got to cash some out so you can go buy your stuff with it, right? And so that's kind of how I always think about this. In regards to why people sell a stock, there's a million different reasons why a CEO would sell shares of the stock, right? But at the end of the day, there's only one reason why they buy a stock, right? And so when I look at something like this, $169 million, sounds like a lot. It's nothing. It's literally nothing. The guy has like $100 billion plus of stock in Nvidia. Let me look at Jensen's net worth here. Jensen net worth, and let's see. The guy's worth $107 billion. $107 billion, and the far majority of that is tied up in Nvidia stock. So to sell 167 million is literally nothing. If it was 16 billion, then it'd be like, ooh, okay, that's a pretty big sale, because the guy's worth, 107 billion. He sells $16 billion worth of shares. So I'd be like, ooh, okay, maybe there's something here, right? 169 million? It's literally nothing when you have that sort of net worth. It would be like me going and selling, like, I don't know, $50,000 worth of Meta stock or something like that. It's all in relation to your net worth. And so this is not a large amount. So anybody that's going to read this and be like, oh, this means Nvidia's downfalls here, Jensen sold shares, it's just ridiculous. Just ridiculous. Because listen, in regards to CEOs selling, listen to the CEOs I'm going to tell you sold stock over time, okay? Jeff Bezos has sold Amazon stock over time. Steve Jobs sold Apple stock many times along the road, right? Zuckerberg sold Meta stock many times over time, right? Jensen sold Nvidia stock over time. I could go through every single one of these trillion or multi-trillion dollar companies and take you through these CEOs selling shares a year ago, 3 years ago, 5 years ago, 10 years ago, 20 years ago, 30 years ago, okay? And look what these companies have become. And so at the end of the day, if it was all about just maximizing this in the dollar amount, honestly, all those CEOs would be better off just holding their shares, right? But you like to buy stuff, right? You only got one life to live. And so if you want to go buy that yacht, I'm sorry, you can't buy it with Nvidia stock, but you can buy it with cash money, right? And so just a little food for thought in regards to that. Hey, I hope you enjoyed that clip here today. Listen, if you're an investor in the market and you do not feel like you're at a high enough level yet, let's say you understand some things in the market, but there's a lot of stuff that maybe you're watching my videos, you're like, I don't really understand. What exactly is that? How does this work? How do I find if a stock's undervalued or overvalued? How do I understand these financial statements on a higher level? All those sorts of things that you need to understand. I want you to click on the first link in the description down there. That is an application to join my private group, which has access to all my best course curriculums to teach you everything you want to know about this game, and all these things you might not fully understand. It's going to teach you that, okay? Plus access to my Discord community of 6 and 7 figure investors and myself in exclusive videos as well. First link in the description down there. Apply, and once you join in there, say hello to me. Next stock up here, number 3 of these 6, is Sofi, the bank of the future. The bank of the future, okay? Sofi, at the end of the day, it's an online bank They offer a lot of the products that others offer out there, but they do it very intelligently, and they can many times undercut a lot of their competition, and they serve some markets that a lot of times their competition's not really willing to do, because maybe it's smaller markets, and so SoFi is able to attract more and more customers. This is why you continue to see quarter after quarter SoFi's amount of customers going up and up and up, quarter in and quarter out, right? Now, also, if you look at SoFi's revenue, it's exploded for this company. I mean, look at that over time. Great growth. 64%, 27%, 74%, 59%, 35% revenue growth. Incredible. And look at their net income. This company lost hundreds of millions of dollars year in and year out for the longest time, right? But just recently, they flipped. They flipped to profitability. They flipped to positive net income. That's a game changer for SoFi forever, folks. When the flip happens, it's pretty darn substantial, okay? Now, SoFi, it's near a penny stock, right? The SEC would describe a penny stock as anything $5 or less. Well, SoFi is $6.52. Why is it down there? That's kind of crazy. They keep attracting more customers. They're flipping to profitability. Their revenues reaches high after high. There's two core reasons. One reason is the Fed lags, right? The Fed lags catching up. We spoke about that earlier, right? And there's worry about the economy and what happens to the economy in that sort of situation, right? And then loans not being paid, and then you attack on high rates. And so big banks are seen as, if interest rates are in an elevated place, actually big banks are seen as like kind of like a beneficiary of that. Smaller banks, which SoFi would fit into that category, or regional banks in a high rate environment, those sorts of banks are seen as not favorable. No one wants to invest in those on Wall Street at that particular time. So that's why you see this dynamic where, look at JP Morgan stock. JP Morgan stock all-time highs, right? All-time highs, the stock has exploded. It's at $208. The market cap's right around $600 billion in JP Morgan at this point in time, right? And then you look at SoFi and it's like, geez, the stock's near all-time lows. Like, what is going on here? That's a difference in rates, right? Big banks seen as favorable, little banks not seen as favorable, right? Which isn't always accurate, but I digress. Reason number two in regards to this is delinquency on credit card loans is exploding recently, right? Really, it started about 2 years ago, and it just keeps getting worse. And this is a 10-year chart I'm showing you right now in front of you. Look at that chart. It's pretty darn scary. And I would say there's a high probability, this is going to get worse before it gets better. Delinquency on credit cards is likely getting worse before it gets better. And so what you're going to see probably over this next 2 to 3 quarters is this number go higher and higher and higher. And we could easily get back to credit card delinquency rates that we were back in the great financial crisis, right? And so this is another reason. And so people run to assumptions that SoFi's customers aren't going to pay back loans and those sorts of things. And it's always a potential. But SoFi, generally speaking, deals with a much higher credit base than let's call it a lot of other banks out there, right? Anthony Noto, I think, has done a heck of a job running this company over the last few years. And, you know, what's incredible is he came over this company in 2018, right? He got them through Rona. He also got them through the student loan pause, which was a mess. And I think he's going to get the company through this situation, right? And so a bet on SoFi at $6 a share is a bet on a company like SoFi becoming a future banking giant, which, when I look at how they're positioned in the market between their tech platform and their banking platform, being a digital first company, I think they're set up very, very well. And they don't have, you know, it's incredible. I was looking at, when I was in New York City, you know, last week, I got to walk by, actually the very first day. I wasn't even planning on doing it. I just happened to be walking. Next thing you know, we come out of the Grand Central Station or whatever it's called there, right? And next thing you know, very close to that is the JP Morgan building. And I'm looking at this building and I'm like, oh my gosh, and I knew it was JP Morgan building because the bottom of it's insane. When you see the bottom of it, it's like, what? How's that holding up this whole structure? That's crazy, right? But it was fascinating getting to see that building. It's beautiful, and it goes to show you the power of a company like JP Morgan, right? But it also made me think, man, these big traditional banks have these massive offices, right? They have all these traditional branches all over the place. And they have an absolutely incredibly high fixed cost, right? Incredibly high fixed cost. You want to have a massive skyscraper up to the moon up there and be JP Morgan and right in the heart of New York City? You can do that, but it's very expensive. It's incredibly expensive, right? And then you got this massive employee force. You got all these branches all over the United States. And it seems to me like that long term is going to actually end up being a problem for these big banks because they have such big fixed costs. And it could hurt their ability to give out returns on, let's say, savings account products, CD accounts, those sorts of things. And so somebody like a Sofi could just slowly keep kind of eating away at market share, slowly by slowly. And it's not even really seen because Sofi is so small compared to those big giants, right? But they just keep eating your customers and bringing more customers over and over and over, and more potential customers that could have went with a JP Morgan or a Wells Fargo or Bank of America. But Wells Fargo and Bank of America, they can't give returns on savings accounts like that or CD accounts, right? And somebody like a Sofi says, we'll give you that return. You want 5%? Okay, sign up with direct deposit. Here we go. We got 5%. Oh, you want a personal loan? So you can pay off your credit card debt, which you're paying 27% on, and we'll give you a rate of 12%, right? And so that's a brilliance with Sofi. They don't have that crazy big fixed cost. And so if you're thinking about who could be really well positioned over the next, you're kind of seeing in the pharmacy game, are you not, right? Look at CVS and look at Walgreens and look at how bad those stock prices are. And why are those companies' stock prices in such a bad place? Well, because they have huge fixed costs. They got these massive store networks, right? Walgreens talking about closing 2,000 stores. Who's to say in 10 years from now, or maybe even 5 years from now, we're not going to see the same exact thing when it comes to all these big banks. And all these big banks are talking about they need to shut down branches. They need to get their fixed costs down, right? And then you've got a Sofi who's running lean and mean. Oh boy, okay? So a bet on Sofi is a bet on them becoming a financial giant, and they got potential. Next one up here, number 4 of these 6 stocks is Zoom Video Communications. I never thought I would be a buyer of Zoom stock, but I just bought my first shares of this one very recently, and I would actually like to build this out to a decent sized position. This is arguably the strangest stock in the entire stock market, because I want you to keep this in mind right here. The stock price is down 31% in the past 5 years, right? 31%. So you've got to assume things have probably gone really bad for this company in the past 5 years, right? Check this out and be ready to have your flapjacks flipped. In 2019, the company did $331 million. In their latest fiscal year, they did $4.5 billion of revenue. So they over 10x'd their revenue in just the past few years, right? Over 10x'd. Meanwhile, their stock price is down 31%. What about the bottom line? Check this out. It is beyond shocking. Their latest quarter, April 30th, 2024, that they had reported, they did $216 million of net income. Now, look at this. April 30th, 2019, they did $2 million in net income. They about 100x'd, 100x, not 1000x stocks. They about 100x'd their net income in just, 5 years or so? That's incredible. Incredible. And so 100x roughly of the net income, and the stock price is down 31%. That's why I say Zoom is one of the strangest stocks I've ever seen in the stock market. Because you're not going to usually see a situation where a company about 100x's their net income over a 5-year basis and their stock price goes down 31% over 5 years. That's ridiculous, okay? Now, in regards to Zoom, the business is incredibly stable, Their first quarter revenue was up 3.2% year over year, and on a constant currency basis, up 3.5%. That's incredibly stable. Look at their enterprise revenue, up 5.3%. First quarter GAAP operating margin of 17.8%, non-GAAP 40%. First quarter operating cash flow was up 40% year over year. And they repurchased about 2.4 million shares of stock. By the way, if you're somebody that wants to hold Zoom stock, you should root for the stock to stay low right now. The reason being is Zoom's doing massive share buybacks right now. So you want them to get as many shares as they can at as cheap as price as possible, right? So this is a very, very stable business model with one of the best balance sheets, one of the most incredible balance sheets you'll ever find. Check this out. Almost $1.9 billion in cash equivalents, another almost $5.5 billion in marketable securities, and total liabilities of less than $2 billion. So if you add up cash and cash equivalents and marketable securities, it's nearly 4x of what total liabilities are for the company. One of the most insane balance sheets you will ever find. And so that means the company can do massive share buybacks if they want. They can buy out other companies if they want, right? They have money for a rainy day. They can get through tough times. They can invest into the business. They can invest in R&D. They can do so many different things because their balance sheet is so phenomenal, right? Now, in regards to Zoom, the other thing I love about it is the product's so great, right? People love Zoom. I've never heard anybody in my life say anything bad about Zoom's product. People love the product. It's a great product overall, right? Microsoft Teams, which could be seen as a competitor. I mean, Microsoft Teams, people usually either have like okay things. It's like, it's okay, it gets the job done, but we're not the biggest fan of it, right? And so that's different. And I like companies that compete in really, they have what's seen as a creme de la creme product, right? No, this other opportunity they have is the phone opportunity. And I know a lot of people think about Zoom just in terms of the video communication, right? And you got to talk to a customer, you send them a Zoom link, or you send, you got a meeting with your employee base, you send them a Zoom link. Well, they had this phone opportunity that's actually pretty darn substantial over time. By the way, they are using AI, and they're actually using AI in a pretty smart way. So they're using AI. Like, they're one of the few companies that's actually using AI in their product to basically be able to sum up meetings. And so let's say you got a workforce of 20 employees, right? And, are all 20 employees going to be able to make the meeting? Probably not. There's probably going to be one or two that are going to miss, right? Well, instead of having to then fill that person in and have a separate meeting with them, they can actually have the notes of the meeting and all the things that were important to discuss in that meeting. AI all sums it up for you, which is phenomenal. And they're also incorporating the AI into phone calls as well, which is absolutely brilliant. Brilliant. This is a milestone they talked about somewhat recently. 7 million Zoom phone seats now at this point in time. And you've seen, this is something I saw recently here. Boise State, starting this fall and continuing through spring 2025, Boise State will transition to Zoom Phone, replacing existing systems with a more seamless, reliable, and AI-powered communication tool, right? And Boise State prior to that was using Cisco. So I remember at Walgreens, from what I remember, we used Cisco phones at Walgreens, and Cisco had a lot of and a lot of big corporates. And now it looks like Cisco is going to end up being disrupted by Zoom. Yep, it's going to happen. And so this is a pretty big opportunity. It's not really spoken about, but I think this is like a hidden huge opportunity, this phone opportunity, because all these companies, they need phone services, right? Like, it's part of doing business. And it seems like Zoom has arguably the best phone-related product out there, especially the fact that you can get AI summaries of conversations. Like, oh my gosh, that's insane, right? So I think this is actually a perfect Warren Buffett type stock. When I think about the GOAT, Warren Buffett, been studying that man for 15 plus years, Zoom reminds me so much of a Warren Buffett type stock. And the reason being is it's a very stable business model, as we can see with their numbers. They have a great product. There's no disputing that, right? Low PE, we'll look at that in just a moment. They have a great balance sheet. We know Buffett loves a great balance sheet. They have a great income statement. We know Buffett loves a great income statement. We know Buffett loves companies that have a very sticky product, and Zoom has a very sticky product. Once you get that into an organization, into a company, I think it's going to be very hard to get, and especially that phone product as well. So, when Zoom acquires a customer, they're likely going to be a Zoom customer for years to go in the future, if not decades to go in the future, right? And so, by the way, I wouldn't be surprised if either Buffett himself or Todd and Ted buy the stock in the next 12 months. Am I counting on that for my investment thesis? No. But I'm just looking at it and I'm like, this is a perfect Buffett stock, man. Now, you look at Zoom's forward P, 11 on this. I think there's also upside to next year's revenue numbers. And so, Zoom. If you asked me 3-4 years ago if I would ever see myself buying Zoom stock, I would say definitely not. But I own it now, and I want to buy a lot of this stock over this next few months. So Zoom, I really like this one. Okay,